Hi, in this video, we will have a detailed discussion on the contents under the two heads of total revenues and total expenses which come in the statement of profit and loss of a company. Let's begin with total revenues. Now, the part of the statement of P&L showing the total revenues is this. Part 1 is revenue from operations, part 2 is other income, and then we arrive at part 3, which is part 1 plus part 2, which is the revenue from operations plus the other income. Now we'll go into these two items, revenue from operations and other income in detail. Let's begin with revenue from operations. Part 1, revenue from operations. It refers to revenue earned by a company from its operating activities. Now, in the case of a trading and manufacturing company, it is equal to net sales, which is the total sales minus the sales return. For a service company, it is fees from services rendered. And in the case of a finance company, revenue from operations is interest received and dividend earned. Please note, we need to include income from sale of scrap as well as trading commission and other operating revenues. We'll check out how we'll prepare the notes to accounts for this head of revenue from operations. So in our notes to accounts, we will write the note number 1. We will write sales and the amount, and we will deduct the sales returns from that amount. And after deducting, we will write it in the outer column, and we will add any amount for sale of scrap or trading commission, and the final amount we will show under revenue from operations in the statement of profit and loss. So we've seen revenue from operations. We'll move on to part 2, which is other income. Now, what is other income? It refers to income earned by a company from sources which is not related to its business or operating activities. That is, income earned from non-operating activities of the company. Let's check out the examples of other income. These are the examples of other income. Gain on sale of fixed assets or gain on sale of investments. Any excess provision which is written back. Bad debts recovered. Interest earned and dividend earned, but however it should be by a non-finance company. The same in case of a finance company will come under the head revenue from operations because it's an income from operating activities for a finance company. Any refund of income tax will come under this head. Transfer fees received, discount received, rent received, commission received, and other miscellaneous income will come under the head of other income. So now once we understand what revenue from operations is and part 2 other income is, we add these two up to arrive at the part 3, which is total revenue. So now we've seen the total revenue, we'll move on to the total expenses. The part of the statement of P&L which shows the total expenses is like this. If you see here, it's part 4 expenses consists of cost of materials consumed, purchases of stock in trade, changes in inventories of finished goods, work in progress and stock in trade, employee benefit expenses, finance cost, depreciation and amortization, and finally other expense. The total of all this will give the total expense. So we will see how each of this is arrived at and how to prepare the notes to accounts for each of these items. So we'll begin with cost of materials consumed. What is the meaning of cost of materials consumed? It refers to the cost of the raw materials and other materials consumed in the manufacture of goods. So this cost of materials consumed is applicable only for a manufacturing company and not a trading company. What is the difference between a manufacturing company and a trading company? A trading company will purchase and sell whatever it's purchased. In the case of a manufacturing company, the company will purchase raw materials, process it into finished goods, and then make the sale. So when we say cost of materials consumed, it is the cost of raw materials and other materials which are consumed by the manufacturing company. How do we prepare the notes to accounts for the materials consumed? We will write the note number. We will take the opening stock of raw materials. We will add purchase of raw materials during the current accounting period. And from this total, we will subtract the closing stock of raw materials. And the final answer we arrived at is what should be shown in statement of profit and loss under the head cost of materials consumed. We've seen cost of materials consumed. We'll contrast this with purchases of stock in trade. Purchase of stock in trade refers to goods which is purchased for the purpose of resale. That is the total purchases less the purchase return, the net purchases. Now this purchase of stock in trade is applicable for a trading company. Now how do we understand the difference? If the company is going to carry out further processing on the goods which it's purchased, then it will not remain as stock in trade, it will become as part of cost of materials consumed. We will see the difference between cost of materials consumed and purchase of stock in trade with the help of an example. Difference between cost of materials consumed and purchases of stock in trade. For example, if a company purchases paper for resale, then it is purchases of stock in trade. However, if this paper is purchased for the purpose of manufacturing copies, then it becomes a raw material used to convert into a finished products, and then it will be shown as cost of materials consumed, the same paper which is purchased. The third item, changes in inventories of finished goods, work in progress and stock in trade. This refers to the difference between the opening inventory or the opening stock and closing inventory or closing stock of finished goods, work in progress and stock in trade. The difference will be a positive figure if the opening inventory is greater than the closing inventory, and it will be a negative figure if the opening inventory is less than the closing inventory. Let's check out how we'll prepare the notes to accounts for changes in inventories of finished goods, work in progress and stock in trade. We'll write the note number and the heading, changes in inventories of work in progress, finished goods and stock in trade. We'll begin with A, finished goods. We will write the opening inventory amount and subtract from that amount the closing inventory and the final amount to be taken to the outer column. We'll do the same thing for B, work in progress, opening inventory minus closing inventory, and also C, stock in trade, opening inventory minus closing inventory. We will take it to the outer column. And the total amount of A plus B plus C will be shown in statement of profit and loss under the head changes in inventories. Let's move on to employee benefit expenses. It refers to all payments made to and for the benefit of employees. Examples of employee benefit expenses: wages, salaries, staff welfare expenses, bonus, leave encashment, employee compensation expense, gratuity expense, medical expenses, and contribution to provident fund and other funds. Please note, conveyance expenses and entertainment expenses are excluded from employee benefit expenses. We'll move on to finance cost. Refers to cost incurred by the company on the borrowings of the company, that is the loans which are taken by the company. Now, bank charges will be excluded from finance cost. Bank charges will be shown under the residual head, which is called other expenses. Examples of finance cost: interest paid on term loans, whether they are secured or unsecured; interest paid on bank overdraft, cash credit, or any other loan taken from the bank; interest paid on debentures and bonds; interest paid on public deposits; any loan processing fees incurred, or any other borrowing costs incurred will be under this head. The discount or loss on issue of debentures written off will also appear under this head, and the premium payable on redemption of debentures also will appear under this head. Let's move on to depreciation and amortization. Depreciation of fixed tangible assets and amortization of fixed intangible assets will be shown under this head. Let's check out the notes to accounts. We will write the heading as depreciation, list down all the tangible assets with their depreciation alongside, total it up and bring it to the outer column. Similarly, we will write the head as amortization, list down the intangible assets and the amortized amount for these intangible assets, total it and take it to the outer column. And the amount to be shown in statement of profit and loss under the head depreciation and amortization will be the total of these two items, the total depreciation plus the total amortization. Now finally, we will have a residual head called other expenses, where all expenses that are not shown under the above 6 categories are shown under this head. Examples of other expenses: we have consumption of stores and spare parts, power and fuel, carriage inwards, carriage outwards, selling and marketing expenses, office and administration expenses, telephone expenses, electricity, rent, rates and taxes. This does not include the tax on income, the income tax. Repairs, insurance, bank charges, discount allowed, any other sundry expense or miscellaneous expense, as well as bad debts incurred, provision for bad debts and provision for discount on debtors. Now we've seen the 7 heads under the topic of expenses. If we add up all this, we will get the total expenses. So now in this video, we've seen in detail the contents of the part 3, which is the total revenue, and the part 4, which is the total expenses. We will deduct part 4 total expenses from the part 3 total revenues to arrive at the profit before tax, and from that amount, when we deduct the tax, we get the profit earned or the loss incurred for the current accounting period.